Hello and welcome to another update video about XRP. So on the XRP chart, we are dealing with the same structure. It's unchanged. We're still holding above the 2021 high, which is important, which is here at 196. Okay, a break below it wouldn't be a disaster, but ideally we would hold it to keep the overall, let's say, direct upside pressure alive, even though I don't think that level is that relevant. I mean, I rather consider the Fibonacci levels more relevant, but still, you know, it has certainly some psychological influence and impact, certainly. And we're currently moving between 196 and the 330 level, which is the all-time high. So squeezed between these in a bit of a range there. And I'd still like to see a bit of upside going forward. At least one more high, maybe even two more highs. That's also what I'm tracking for many other cryptocurrencies, including Bitcoin, where I would like to see one more 4-5 pattern anyway. So this here could be a fourth wave now on the XRP chart internally before we form one more high to complete this larger degree third wave. And there are two wave counts. I mean, the top could be in here. Okay, I probably should add that. The top could be in there if the fourth wave finished as a triangle. Then the fifth would be here, the next high, right? That is definitely something to consider. Not sure if I talked about that clearly before, but that is something. If this here is a fourth wave triangle, then one more high might be enough to complete the whole thing. Whereas if the blue count is playing out, which is a slightly different subdivision, I explained that in other videos, well, then we could still see another 4-5 pattern afterwards. Okay, but we don't want to spend too much time here on the XRP chart, on the long-term chart. Let's take a look at the short term, because the long term hasn't really changed. Just wanted to make sure it's clear that one more high might be enough to actually, complete the whole thing. We saw a brief break below this 61.8 extension here. That's not strong support. I mentioned it in one of the member updates late yesterday, that this is just weak support. Can't remember if I showed that also in the last video, but it's only weak support. We can take it off. It didn't generate any major response. It's only based on the internal structure, so not really any relevant support really, or nothing too important. Looking at the structure here, I'm considering two pathways. One would be a triangle, so that this fourth wave currently, it's an internal fourth wave, is unfolding as an Elliott wave triangle, A wave, B wave, C wave, D wave, E wave. You could get a lower high in wave D and a higher low in wave E, which would complete a, let's say, 5-wave sideways triangle. And once the triangle is complete, there's an upside breakout around the corner. Now, to keep this scenario alive, the price should hold above $1.90. That's the swing low from the 10th of December. Why is that? Because in any Elliott wave triangle, in any contracting triangle, the C wave must hold above the A wave low. And that's the $1.90 level. This is the swing low that formed after the first pullback, after the rally which topped on the 3rd of December. So A wave, B wave, C wave, D wave, E wave means it needs another lower high and another higher low. And there's a clear invalidation point. Now, if we break below it, then this blue count is what we're watching for. It's just here relevant on the micro level, really, but it would indicate that this fourth wave would just move down a little bit lower in a direct fashion, and it's just a classic ABC structure and not a triangle. In this scenario, we might go a little lower. I really don't have any reliable micro count here. I'm promising you, if I put a micro count here in this correction, it's likely going to be invalidated because there are just too many options. What you might want to add here is some kind of a trend line, which could be an indication of, just some kind of an upside breakout when we get above that trend line, but that could simply be the D wave. So for now, I think it's important to keep an open mind about the exact microstructure here. Certainly, there is no clear evidence that the low is in and that a fifth wave to the upside has started. The main question is, do we see this unfold as a sideways correction in a triangle? But in this case, we have a very clear invalidation point. Or if we go a little bit lower in wave C, then we can watch certain Fibonacci extensions that we can add to the chart. This would be a Fibonacci extension zone. We take the length of the A wave, go to the high of the B wave, and then for wave C, it's typically the area between the 100% extension and the 161.8 extension. So that would be 139 to 180 with additional levels at 153 and 163. But again, that would only we would get clarity. This is what's going to unfold with a break below that 190 level. That's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.